Hello, everybody. Moving on to the third section of the monthly update. Let's discuss and look into how much to invest in Igneo, in goalkeepers. It's basically about the role of strategy in the overall portfolio. And this is something it hinges around the concept of true versus false diversification, and I think this is more relevant than ever after what we've seen in March. Basically, to me, and this is obviously a football pitch, I think it's very important, and I use this analogy because it's important to understand that a portfolio is a team. A lot of people think that because Lionel Messi is the best footballer in the world, and therefore a team with 11 Messis would be the best. That's not necessarily true. I think every other corner they would potentially struggle a bit. But basically, at the end of the day, this is about building the team, and the team needs to be fast. We need strikers, we need midfielders, we need defenders, and each portfolio is the team, and you're the coach on our end, where you're looking at internal there to play a role and do the best we can. So in that sense, I view our role very clear, which is keepers, striker, dominate in a very consistent. So that's probably the best feedback we're getting. Now, I think related to this again, to me, the investment game is really about capital preservation and protecting the purchase power, which is the defense, and also compounding and scoring goals. But I think a very common mistake people make is to think that this is a game where it's only about scoring goals. You win by investing. Is about making money. It's about income and capital gains. And in that sense, they forget the defense or the goalkeeping. Spain has only ever won one World Cup, and the last 4 matches were 1-0, 1-0, 1-0, 1-0. So thanks to our goalkeeper and defenders, we won that. So as a corollary from this striker mindset, what we've seen is sometimes portfolios built with 10 or even different things with a diversified portfolio. And when things go wrong, as we've seen this month of March, turns out that everybody was, you just had one big trade. That's it. You didn't have any real diversification, which is a major problem. I think this has been exacerbated by the complacency that the central banks and the governments got your back. This central bank put this complacency and bullying in a way would be like the referee was bought, so you didn't have to worry about the other team scoring or defending for that matter. So people also thought, and this is something I stressed before, that cash is the defender. No, cash is not a defender. Cash is a striker in the bench. I mean, people think about it as money on the sidelines looking to be deployed, but it's certainly not a defender. And I think in the current environment where inflation is starting to be over the medium term a problem, I think there'll be pressure on that side. If you leave the striker in the bench long enough, I think it will go lose a lot of value and power. This is also very important. You know, German Bund legendary defender, world champion with Germany in 7 years old. So to be honest, the ability for Beckenbauer to defend, to make money with negative yields is actually very limited. 60-40 are actually not balanced. And I think the US treasuries, whilst they have some room to defend, they're quickly aging in that sense. So this puts even more emphasis into defenders or ways to actually balance the portfolios. And this brings me to things like trend followers or other strategies that they were, in my view, missold in some occasions as defenders, when in reality, they lost a lot of money, many of them, in these moves because they were not defenders. They were really actually trying to score. The market was high and they're max long at all-time highs with max leverage because of artificial low vol. So this is a major mistake, and the coach perhaps thought they had defenders, but they may not necessarily be there when you need them. So this is a big issue, which brings me to the anti-bubbles, the anti-crisis, and goalkeepers in general, and a very important point, which is timing. At the end of the day, I don't think as a team you can pretend that you can actually, as a coach, put everybody on the attack or everybody in the defense and be able to successfully do that. I think when Real Madrid or Barcelona play a third division team, they still have a goalkeeper and defenders. So this mindset of having all strikers and thinking you'll be able to build a defense, I think is a basic mistake. So in that sense, this is a game where it's really about building a team, and this is your team, and will help you win matches and championships. So on a standalone basis, we're as we saw earlier, we're a pretty good player. We've achieved very high absolute returns. We've achieved very high risk-adjusted returns, both in terms of sharp ratios, as well as Sortino's, very asymmetric strategy. And more importantly, as a goalkeeper, we do very well when you need us, as is evident by the hostile markets, as discussed earlier. What happens here is that when we build a team of 50-50, passive team, we just put $100 and 50-50 and we let them run, what you get is actually a very strong team, because you end up having pretty decent returns. As you can see, effectively the weighted average of the components. But more importantly, you achieve them with very low risk, both in terms of volatility and more importantly in terms of drawdown. So when you look at that, effectively the risk-adjusted returns of these strategies are through the roof. In this case, we're looking at Sortino's of over 5 for the 50-50 team. In fact, it's so powerful that when you look at the risk profile, it's actually possible to create what we call risk-reducing leverage or smart leverage, which is if you have $100, instead of investing 50-50, you could put 80 into goalkeepers and maybe 80 into strikers, perhaps by buying futures or something. And this basket, which is 80-80, it is leveraged. It has 160% of money invested, which means it will make 160% of the returns. But what is very important is the risk also increases by 160%. But because the risk was so tiny, effectively you end up with a strategy that it's way more conservative than either of the goalkeepers or the strikers alone. If you combine this with a rebalancing process, which is embracing the volatility of the market, just bringing your allocations back. So once the market goes too much in one direction or the other, this is resulting in really quite extraordinary numbers. We're talking about numbers that are in the region of 43%, or 25% annualized, with Sortino's in the region of 6%. And this is something that, again, I emphasize, it's a very, very stable strategy by construction, and it's based on this diversification. This explains why we're now above 300 million in terms of AUM. We count with a very strong and diverse client base, large institutional, thank you, lots of family offices, lots of different discretionary managers pretty much all over the world. Through the process, we've been, many of these big institutions outsource the on-site due diligence to top firms like Axia or Castle Hall, for example, which have already completed the analysis and are willing to provide that at very discounted prices. They've already done the job, I guess, and it's a win-win for everybody. We don't want to spend 2 weeks doing 5-hour conference calls with and doing checks that have already been done. So I think this is something that is just very efficient. And for those of you who would like to or are more comfortable having this sort of reports, let me know. We have best-in-class partners all in all respects, and platforms available through all funds, through Pershing. We have very aggressive pricing with main share class for a minimum 125K, that is 1.5 and 0. And we also have a share class for minimum 5 million, that is 0 and 20. And I think it's pretty safe to say that we are probably not only one of the best performing managers in the world in the last few months in the year, but certainly I don't think anybody does it with this sort of 0 and 20 profile. We have also, for those who need retro sessions, we also have a share class. We can do that. With that, I will move on to the next section, which is an update on the investment thesis, before we look at some of the lessons learned and the robustness and how to thrive through a crisis.